Hello traders, what is going on? So for today, we are going to be doing a technical analysis video on Russell 2000 ETF. So before I begin, right, if you guys have not watched the market update video and a potential short trade setup that I posted yesterday, do go and take a look at the video. Although that video itself do not have any connection to this technical analysis video, right? It does contain some information about the current condition of the US market. And in order to make certain trades, you do need to understand the overall direction, the overall market condition of the US market. And I think since we are talking about the Russell 2000 ETF, I believe that that information is quite important also. It is a topic that I have been discussing since towards the end of January after the market meltdown. We are seeing a lot of changes in the macro numbers and the market environment. We are in the transition period, so we do want to be a little careful, be extra careful, and not go into a full-blown long position or a full-blown short position. We need to be a little bit more agile in this in this current market condition. Okay, so without further ado, let's talk about the Russell 2000. So this is a pure technical analysis. There's no trade idea, there's no trade setup, there's no trade recommendation. But if you want to take a trade based on my technical analysis, right, you are free to do so. But once again, please take care of your risk management and loss sizing due to the fact that the current market condition is slightly volatile and the direction is still kind of unknown. Okay, so firstly, what is Russell 2000? So in order to answer that question, I'll just Google and give you the Investopedia definition. Okay, so Russell 2000 is actually a index which tracks 2000 of the small cap companies in the Russell universe of 3000 stocks. So to cut things short, it is a small cap index in the US market. Okay, it tracks all the small cap index. So you can go and look up what are the example of companies that are considered small cap. So I did a Google search also. For example, this is from Investopedia. If you scroll down a bit, right, you can see the components of the Russell 2000 is AMC, Synaptic, Lattice, Tetra Tech. So these are not your big names company that you are used to, like for example, Amazon, Apple, all this, right? These are essentially all the small cap counters. So if Russell 2000 is a ETF of the 2000 small cap company within the Russell 3000, right? Then what is the Russell 3000? So one question will lead to another question, but once again, in summary, right, Russell 3000, for simplicity's sake, for pure simplicity's sake, you can treat it as the S&P 500, because if I move to Russell 3000, let me remove the volume, let me change this into a line chart, and let me overlay this with S&P 500 ETF. You can see that the price action is identical to the T. There's literally no difference at all. Okay, so there's no difference at all. So if I move back all the way back to year 2000, okay, the year 2020 bottoms, okay, it is pretty much identical. In fact, the Russell 3000 kind of like return slightly more in terms of percentage wise, but the moment it drops, right, it kind of like overlap together with the S&P 500 again. Okay, so in terms of the movement wise, you can treat these two as the same lah. But let me add the Russell 2000 ETF on top of these two charts, and you can see that the movement is much different. The small cap actually have a very big explosive growth. So these are all your small cap companies that don't know making what product, don't know profitable or not, all the chapalang nonsense that we have no idea what's going on. Like people on TikTok or social media say buy, we all just buy. We don't really know what their business structure is. So yeah, these are those kind of crazy counters that shoots up like 1000%, 2000%. For example, you can see that AMC Entertainment is in the Russell 2000. So I'll probably think GameStop is inside here also. So these are all the crazy speculative stuff lah. Okay, so we do see that huge growth that beats the Russell 3000 and the S&P 500. In fact, if you invested in the Russell 2000 from the 2020's bottom, right, you are still doing a lot better than the S&P 500. You are still up by 98%. But there is one behavior that it will immediately pops up to you, which is during 2021, from the beginning of 2021, right, the entire Russell 2000 has been in sideways already, whereas the Russell 3000 and S&P 500 are still steadily going uptrend lah. Hence, because of that, right, when it kind of like fall during the January period, both the Russell 3000 and S&P 500 decline. But for Russell 2000, it kind of makes a fake breakout before it start to dive all the way back down. And what you will notice also is that during this recovery, right, it does seems like the recovery is much stronger in the Russell 2000, which is this teal color, compared to the S&P and the 3000. So let me kind of like move this further. So if we go to the beginning of 2021, you can see that both the S&P 500 and Russell 3000 severely outperform the S&P 500, the Russell 2000 lah. Okay, so from the top to bottom, right? From the top to bottom, let me look at the S&P. S&P is the orange line. From the top to bottom, S&P dropped about close to 10%, but Russell 2000 actually dropped close to 20%. So that's how volatile the small cap companies are. So what you will notice with this kind of small cap companies, that when they drop, right, they drop a lot, way more than the average market drop. But when they move up, they also move up a lot compared to the average market. It is just that from 2021 until now, there isn't any movement, any trending movement in the Russell 2000. Okay. So now that we have made this comparison already, let's look at the Russell 2000 closely, more closely. Okay, so let me switch back to candles, and then let me put in the volume, because we are doing volume spread analysis, and the volume does give us additional insight to what is going on with this particular index itself lah. Mainly because if you look at price action, if you look at the candle price action, indicators like RSI lah, moving average lah, MACD lah, all these are derivative of the price action lah. So if you are very familiar and experienced in reading price action, right, you don't really need all these additional derivative price action. But of course, you can once in a while use them to confirm what you think it is happening, but they do not provide any additional insight. Whereas volume is actually an additional dimension to on top of the price action. So it is good to use your volume together with the price action to have a better analysis, better understanding of what's going on within the sector. Okay. So since we are covering from the entire ranging period of 2021 until now, right, I'm going to switch this into weekly time frame so that things are a little bit more obvious. So just by switching, right, we can kind of figure out where the support and resistance are for this Russell 2000 ETF. So the support is somewhere around 211 or 210. So you have to understand the concept of what a support is. A support is where buyers come in, but there's no seller, no one wants to sell so low, but there are also buyers coming in up to buy at this price. So it is a price that is the seller are willing to go this low, and after that they don't want to sell ready, and that's where the buyer come back in and buy. So the thing is, it is not going to be one single nice number. Sometimes it can be 210, sometimes it can be 209, sometimes it can be 208. So these buying points and selling points, they are created by humans, they are created by traders, there are emotions involved, there are human errors involved. Maybe one day some guy wanted to buy at 210, but then he had a stomach ache. This prop trader in JP Morgan, he got stomach ache, he went to the toilet, and when he come back from his toilet, he want to buy, right? Maybe the price is already at 207, and then he go in and buy. So now the support is at 207 instead of 210. Okay, so you have to understand that support is not one single line, not one single price. There is no such thing as a correct support. So if you always go and think about, oh, should I follow the candle body or should I follow the candle wick? All these doesn't matter. All these doesn't matter. You have to know that a support is a general range area, is an area, not one single price. So, okay, so always use your best judgment. So in this case, you have a lot of wick that is happening here. Then we will, of course, definitely use the wick area also. But what if you have a situation where all the candles are here, 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 and then you have one wick that come out like that? Then, of course, you will use the candle body as a support or resistance. Okay, so remember, there are no clear-cut, shortcut answer to certain questions. You always need to think a bit. You always need to look at what the current situation you have right now, and then decide what is the best approach, what is the best guideline. Okay, so in this case, I will just draw one line to see where most of the price are rebounding. So it is somewhere around 210, 257, somewhere around there. You don't have to be like exactly accurate to the dot, because that all the buyers are not sitting in one big gigantic meeting room and say, okay, let's buy at 210. It's not like that. Okay. Secondly, the resistance will be somewhere around here. So just by looking at this, right, you will notice that there's a fake, so-called a fake breakout before it just crashed all the way down to break the support level. So the key question from trader is, of course, so Zol, how do you determine what is a fake breakout, what is a real breakout? How can we tell? Is there any way to tell? So the honest, brutal, honest answer is, I'm sorry, there's no way to tell. There's no way to tell if something is a fake breakout or a real breakout until price have already moved. Okay, so there may be certain clues and certain technical analysis that you can pick out to kind of like convince yourself that this is fake or this is real. But what you will notice is that at the end of the day, it will be like 50-50, or it will be a 40-60. There's no, it's not 100% confirmation. Okay, so when we talk about fake breakout, let's say for example, if I turn back in time and if I give you this chart, all the evidence here will let you know that this is a true breakout. Price is going to rally up. Why? Because we have an increase in buying volume, like here volume low, but now we have an increase in buying volume, and then our long trend is up. This is a bearish flag, bearish panel, whatever. And if we look at all the weekly candle, there's a lot of wick. There's a lot of wick. Like there's a lot of buyer coming in. There's a lot of buyer. So this one confirmed guarantee chop is a real breakout. It is within our textbook definition of a true breakout, because we have a long-term uptrend. We have a period of good consolidation, and within the consolidation itself, all the candles are showing that there is buyer coming in. There's confirmed guarantee chop buyers are coming in, and on top of that, we have increased volume when the breakout finally happens. So these are all evidence, quotation mark evidence of what a breakout is, what a true breakout is. If for example, if let's say it is a fake breakout, then you definitely have a low volume or whatever you want to believe, okay? But at the end of the day, all these analysis, right, most of the time they will come to 50-50, and most of the time it is not a confirmation. So most of the common mistake trader make is that they will go all in. they will say that, wow, this one guarantee confirm chop percent, 100% win one. So guarantee make money one, free money from the sky. So they will go and trade with their entire account and their CFD all leverage up to the top to the teeth, and then after that they lose all their money when the breakdown comes. So that is the reason why we have risk management in the first place, because we don't know. We have a good idea, we have all the supporting evidence, but it is not 100%. We don't know. Okay, so if you want to look at this in a bigger, much more holistic perspective, right? If you were to take this trade 100 times, every time you see this kind of chart comes up, an uptrend, consolidation, and a breakout, and if you were to take this trade 100 times, right, most likely you are going to win most of your trades. You are going to profit from most of your trade, because it is a textbook breakout setup. It is a textbook breakout setup, meaning if you make 100 trades, probably like 65 of the time you are going to get profit, but the other 35 of the time, right, you might end up in a loss, because there's definitely no 100% confirmation. So if you look at it in terms of a more simpler approach, right, if I flip a coin 100 times, everyone can tell you, almost everyone can confidently tell you that most likely it will be 50 head, 50 tails, or it will probably be a little bit like skewed a bit, maybe 49 head, 51 tails, or 53 tails, 47 heads, but it will be within that 50-50 with a little bit of plus minus deviation. So everyone can convincingly tell you that. But if I tell you that I'm gonna just flip this coin once, and you have to tell me whether it is a head or a tail, then suddenly everything falls apart, because now you have no idea what is it going to be. So this is the law of large number, and in trading, right, you have to be aware of the law of large number, mainly because we want to survive long term. We want to ensure that in the long terms, right, our trade are always winning. But if we look at one single individual trade, and if we are looking at very specific evidence to 100% guarantee confirm chop win, right, you are never going to get it. And that's why risk management is a very important concept. Okay, so enough about this concept. It is slightly hard to grasp if you just started trading, because as trader, right, we do on all this analysis here and there for what? Because we want to make money, we want to guarantee make money. So like after doing all this analysis and still end up things are like 50%, 40%, then might as well go and randomly trade, right? So yeah, so these concepts are slightly a little bit harder to understand and digest, especially if you are trading, or if you just started trading, or if you have been trading wrong your entire life. So these are some concepts that you must get used to lah. Okay, so now with that said, sorry, digress a little bit too much. So this topic of law of large number is something that it interests me a lot, and I studied quite deeply, which is why most of my trade I tend to have a trade journal, because a trade journal is the only way you can track the law of large number and your overall winning percentage. Like there's no way you can look at one chart and then say this one up, this one down, and then guarantee win, guarantee loss. So I do have a lot of a lot of personal opinions when it comes to the statistical aspect of trading. So nonetheless, let's move on. Okay, so we have a false breakout. Then after the false breakout, price come back down, and not only did price come back down, it break through the support. It break through the support. So that's not a good sign. That's not a good sign, because this consolidation has been going on for almost entire year. Okay, almost entire year. So just think about the concept of what consolidation really is, and what does a long period of consolidation actually represent. Okay, so in this case, this consolidation period, it means that both the buyers and the sellers they are balanced. There's enough equal buyer and equal seller who are interested in that same price level. So let's take the mean of this price level, which is somewhere around, I would say 222 lah, okay, 222, or maybe 220 if you want a better number, okay? So during this period, both the seller and the buyer, they are happy with this price level. Seller are happily selling at 220, buyers are happily buying at 220. Maybe at some point there will be a little bit of deviation, but most of the time, both the buyers and seller are happy, okay? Okay, so both the buyer and seller are happy. But the thing is, like even for the smart money, even for the bank institutional traders out there, right? They truly have no idea how many buyers are there or how many, they have no idea how many sellers are there or how many buyers are there. So they have no way to know the lurking buyers and the lurking sellers. So the only way that they can kind of like know is they can test the market, they can push a bit, and then if they see seller coming, right, okay, they are still seller, or they can push a bit to test again. And if seller comes in, right, they will see seller. So that is where your resistance is being formed. And similarly, for the support side also, the seller are going to sell, and the moment they reach the so-called the lower end, right, they are not going to like sell down so much, because if they sell so low, they are not making any money. If you are a seller, right, you definitely want to sell high. So they will like test the water a bit, and if they see buyers coming in, right, they know that okay, they are still buyers, so let's not sell so low, let's wait a bit. And that is where the buyers start to go up. And when the buyer reach the upper range, they test for the seller also. So both the buyer and seller, they are testing each other out, and most of the time it's happening at this price level of 220, and that is where the consolidation is formed. So both the buyer and seller testing out, right, they are doing this because they have no idea how many buyers are still there, how many sellers are still there. They have totally no idea at all. So at this point here, for some reason, I think the seller managed to trick the buyer. And the moment the buyer went up, right, the moment the buyer start to buy up, they realize that, hey, nobody's selling already. Nobody's selling. So most likely no more seller already. So the buyer can become FOMO. So for example, if I tell you that there is a limited number of iPhone 14 out there, and then for the entire year, all these iPhone 14 are selling at $1,300, okay? 1,300, example. So after a period, your friend tell you that, hey, now there's no one selling iPhone 13 at 1,300. The next seller is like 1,400. So if there are still a lot of buyers who are interested in iPhone 13, right, then they are going to become FOMO. They are going to panic. Shit lah. If I don't buy at 1,005, right, maybe no more seller already. Also later the next seller is at 1,007. So all the buyer will suddenly rush in. But after the buyer rush in, right, the market kind of proves that there's actually a lot of sellers still looking around. There's a lot of sellers looking around. So of course, we do not want to go down the rabbit hole of like everything is underground trading, everything is like black market trading, this one trying to backstab the other person, this operator trying to backstab this and that, everyone in their secret meeting room trying to screw everyone else. It is not as dramatic as that, because most of the time each institutional trader, they don't really know what the other institutional traders are doing, and they don't really have this organized movement among all institutional traders, because if there is, then there's simply no way for them to make money already. So most of the time it is the institutional traders screwing other institutional trader. Us retail trader are just get caught in the process lah, okay? So we are nothing in the eyes of the institutional traders. Okay, so that's one concept you need to understand because a lot of retail trader thinks or all the institutional traders are ganging up to screw us, which is impossible, because retail trader do not have the kind of liquidity that institutional trader needs to sell their stuff. Like if you combine all the hedge fund and all the big banks together, right, they are probably over, I don't know, a few hundred billions worth of fund that they probably need to sell. And if you combine all the retail trader with all those in Robinhood account lah, Tiger Broker lah, you combine all the retail trader funds, right? I think it probably won't be like even 1 billion at all. So we have no form of liquidity to provide to this institutional trader where they are trying to screw us lah. Okay. So sometimes we need to take off that tinfoil hat and not fall into those kind of traps. Okay. So what I believe probably happened here is that there was a point where when the bulls are buying up and then they realize that no more seller, and then all the institutional bulls starting to like become FOMO and buy up, right? At the same time, the institutional seller, they are probably like falling asleep, or they didn't know what's going on, or they were caught off guard, and then one day they look at shit, the Russell 2000 at 240 ready. Wow, like didn't expect, quickly sell. Then all the bear sellers suddenly come back out and immediately sell all the way down. Immediately sell all the way down to the point that the support is broken. So what you will notice is that it didn't dive all the way down. It kind of went into the consolidation period again. It went sideways for a bit, then it started to go down. So what does this price action here represent? This price action here represents that actually the balance have been broken. There's no more buyer already. So here we are led to believe that there's no more seller, but it's actually the other way around. And after that, all the overwhelming number of seller, they suddenly wake up and they were like, good, it's now the time to sell. So they probably didn't expect the bulls to be FOMO like that. It just happened that the bull become FOMO and it presented an opportunity for the seller lah. Okay, but this little price action that you see here is very important because this tells us that there's actually no more bulls within this level here, and it is also supported by the fact that the selling down, there's a sudden increase in high volume. Okay, there's a sudden increase in selling volume the moment it came back up here, and this selling volume is like so much greater compared to the entire consolidation period. We never have this level of selling volume during this consolidation period. It is almost like close to double or close to like 1/3. Okay, so this is quite a significant volume, and after which you notice that during this consolidation period, what do you see? You can see that the buying volume now become very low, meaning there's no longer sufficient buyer coming in already. And that, of course, was confirmed by the fact that price start to go down some more. Okay, so now here, what you are looking at here, what you are analyzing here is past price movement. Things already happened. So you can also say it is hindsight because we are trying to see how the price move and we are trying to pick out certain evidence on why this price move. Okay, so we are looking at the past price movement, but when we want to look at the forward price movement, things are not confirmed. Okay, so you cannot go and pick one chart where the thing is consolidating and then you see low green volume, you go and anyhow short your entire account. You are going to have a bad time because now we are just trying to understand things that already happened. Because when we look at things that already happened, we can look at whether if this particular price level, are there still any supply, are there still any demand, and we can make much more educated future trade if we can kind of understand what happened in the past. That is what we are trying to do. Okay, we are not trying to go and find a chart with low green volume and then short. Most likely you're going to have a very, very bad time. Okay, so now we have established a few things already. Probably there's no more buyers here. There's no more buyers within this level. That is why we see a big candle that's breaking down. Secondly, we have another big volume, this time green, coming in at this price level at 195 level. So you can conclude that this is the new support, or this is where all the new buyers are coming in. That's definitely true. All the new buyers are coming in. But the thing is, one movement like this alone, right? It does not establish a support. It does not establish like, okay, there are no more seller already. So what's gonna happen is price gonna do like the buyer and seller are going to test each other again, like how they do here. But the thing is that maybe this time it might not be so long already. It might not take 1 year already. It might take like maybe 1 month, 2 months, or I mean, we don't know the time frame, but we can somewhat conclude that it's not going to take another 1 year because all the seller have shown hand ready. Since the seller have showed their hand, right? The question now here is the buyers here enough to support further selling that is coming ahead? And that is the question that we need to know, we need to understand. And that is where we need to plan our trades on, okay? So yes, we have a temporary support here for now at 195. But the thing is that as price recover, right? As price recover, the volume of the recovery is actually decreasing, meaning that there's not really a lot of buyer interest coming in to support the fact that this is a new support. Okay. So that's not really enough evidence. In fact, the evidence is pointing in another direction. And if you look at the previous 2-week candle also, it does have a lot of wick. It does have a very long wick, which kind of represent that there are seller coming in. There are seller coming in, but the overall direction is still up for this time frame and the volume that is going up is quite low. So most likely what can be going on is that the seller realized that, hey, actually there are some buyers, even though not so much, there are some buyers. So if there are buyers coming in, right, what for are we selling at 210? We just let the buyers buy. And once the price reach to maybe back to this zone, this particular zone, somewhere around 210, then that will be where the bunch of seller will come in again and sell. So most likely the sellers are looking around there, waiting around there. So it is what happening exactly like here. The buyer are testing, the seller are testing. But in this case, I would think that there is actually more seller looking here than enough buyers looking at the bottom. So as the price come back up here, I believe that at some point we will see selling coming in. And when that selling coming in, right, it's going to go back down to 190 again. And at this point, there will be a critical, I would say, junction where it will let us know, are there still enough buyer at this level to support the price? If it doesn't, it's going to break through and it's going to fall further. And what you have is you will have a high, you will have a low, and you will have a lower high, and then you're going to break through the low. Okay, so that is one scenario. So another scenario is price go up, the seller come in, and when price come back down, there will be suddenly maybe a lot of buyers coming in. We don't know. There can be a lot of suddenly buyers coming in, and maybe it could be because the Federal Reserve doesn't want to hike the rate so much, or maybe they want to change their mind, or they do some, I don't know, some funny stimulus event again. They went back on their words. All these kind of things, even though not probable, right? It is not impossible. This kind of things can happen, and that is the reason why the COVID recovery was very strong, even though like the COVID-19 sort of like decimate the entire economy, right? Federal Reserve came in and print a lot of money, set the interest rate to 0, give a lot of stimulus, and then we have one of the biggest rally in the entire human history lah. So like these kind of things can happen, and but the thing is it probable or is it possible? It's possible, yes, but is it probable? No, I don't think it is not probable. So I don't think it's probable. Okay, so we have to keep that in mind. But it can also be that maybe instead of doing like this or doing a V-shaped recovery, it can also play a little longer, and then after that it can go down or it can go up. So what I'm trying to tell you is that at this point, right, at this point here, it is too premature to make any kind of long-term direction to throw your entire cash position. And it's too early to throw your entire capital inside here and think, okay, we are going to recover to the moon already, or it's also too early to go and put your entire position in a short and then, okay, we are going to break the bottom already. Both sides are still too early to make that decision. But what you can do as a trader is that, let's say price come back up to 2100, 2200 level. Sorry, there's airplane in my area. Give it about 10 seconds. Okay, let's continue. So sorry. Okay, so as I was saying, you wait for the price to go back up to 2100 or 2210 or 220 level, or maybe even 200 level. We don't know. We don't know. But it is going up. It is going up. Okay. So after it goes up for a while, you will start to see selling coming in. You will start to see selling bearish candle coming in. Okay. So maybe you will see this kind of candle like that. Okay. So the moment you see that selling coming in, you can consider a short position. You can consider a short position here. And when you take the short position, right, you can actually take the short position down to 194 or 191, that kind of level. You can take the short position level. And when it reach this level, you can set your stop loss to break even, or depending on how you want to play, it's truly up to you. So sorry about the airplane. Okay, and if let's say price continue to recover again, right, you can run your position with some profit, or if it continues to drop, right, then you can still continue on hold your position and get a bigger profit. So that's one trade setup that you can take. Okay, so or the moment the price reach here, you don't care whether drop or go up, you just immediately run. That's one way you can do also. Okay, so these are some of the trade ideas that you can perform, but for the purpose of this video, it is purely from an analytical standpoint. So however you want to trade is totally up to you. Maybe Nimbus Capital might take this trade, maybe not, we don't know. We see what are the price action that we can observe. After that, we also have to account for opportunity cost, where we have to see, are there any other counters that are going down. So we typically like to trade specific counters instead of ETF, because when an ETF goes down, right, suppose from 220 to 188, is going to go down by 14%, which is quite okay. But normally when we trade individual shares, right, individual stock, they tend to go down by like 20%, 25%. So there's more meat there. There's more meat there. So maybe instead of trading this ETF, you can go and find the weakest counter within this 2000 Russell 2000 components and go and short that weakest counter instead of shorting this ETF. So that can be one way also, but of course, it's gonna require a lot of work, and I mean, I'm not going to do that. I'm not going to do 2000. Picking one weak counter in 2000 companies is a little bit too much effort for the kind of potential profits. Okay, so you can take the shortcut and short the ETF, but that is totally up to you. So currently right now, I am still on a slight bearish sentiment. So let's recap and take a look at the evidence that are pointing towards this bearish sentiment. Okay, so firstly, we have the fake breakout, and secondly, we have a high volume sell down, and thirdly, when we came back to this consolidation period, the buying volume is very low. Okay, and fourth, price break down from this consolidation range with increasing volume. And although we have like a high volume support here, it does not signify that there is no more seller already. Okay, there's nothing that can tell you whether, okay guys, seller have run, no more seller already. There's no indicator that can tell you that. If there is such indicator, everyone will be instant billionaire already. Okay, so there's no indicator that tells that. But based on the price recovery in the past 2 weeks, it is in a decreasing volume. So even though for this week, we still have 2 more trading days, I believe that this week volume will not increase the previous week volume. Okay, so if we go on to a daily time frame, right, you can see it is like downtrend. It is in a downtrend. And in fact, the only time when there was a surge in the green volume is when we have a we have a shooting star candle there. So that gives you a little bit more evidence down the lower time frame. Okay. But on a bigger time frame, I don't believe that this week volume can exceed the previous 2-week volume. So based on all these facts, right? I believe it is a bearish sentiment for now. And because we have this like level here, I don't think price can go above 230 if my bearish sentiment is correct. But of course, if my bearish sentiment is wrong, or the buyer come in, don't know from where, suddenly appear again, like how the seller suddenly appear here, that's not impossible. Also, then everything can shoot back up. So when that happen, right? Oh my God. So sorry. So when that happened, right, of course you cannot cling on to your stubborn bearish mindset and then say and then double down your short, all this kind of thing. You definitely have to get out of the trade. Okay. So hopefully this session give you some insight to a bit of what is the law of large number, the importance of statistic analysis in stock trading, and also a bit of volume spread analysis and a bit of price action, chart structure, all this kind of thing. And whether you want to take this analysis and make the trade, that's totally up to you. But if you want to find out whether if Nimbus Capital, we are taking the trade or we are making other trades, you can follow our Patreon channel to see what are the kinds of trade that we are taking. We do have weekly webinars. On top of weekly webinars, right, we do host ask me anything sessions, stock request analysis, or just chit chat session that we sit down and talk about all the market stuff, all the potential tradable stuff that is happening in the current market. So you can sign up for Patreon if you are into that kind of thing. So there's a lot more engagement between me and the Patreon subscribers. Okay. And also to do some shameless advertising, I still have 2 more slots for my March 2022 course, the 3-month course, which is kind of like coming up soon. I still have 2 open slots. So if you guys are interested in a end-to-end coaching and learning how to trade, so it is not just giving you all the theories and info dump on you, give you one booklet and just rush through that booklet, right? My trading course focus a lot on coaching in the live market. You will learn not just the strategy, but also things like what I mentioned, the law of large number, portfolio management, trade management, risk management. All these things are equally important, if not more important than knowing where to enter and where to exit. So it is an entire package for stock trading only. If you are interested, do drop me a message. I will put all the links to the Patreon and the course registration in the YouTube video link. Okay, so at the meantime, be cautious of the US market. Don't YOLO. And hopefully this kind of analysis will bring some value to your trading journey, especially right now where we don't really want to be trading so much. So it is a good time to do some analysis, learn some certain skills, so that when the market direction is finally known, you can go in and maximize your profit. Okay, so have a good day, everyone, and take care. Stay safe.